Hello trade pros. In today's video, I'm going to talk to you about market seasonality and how you can use these predictable annual trades to your advantage to identify low risk and high probability trade opportunities. This is an awesome video and I'm really excited to share it with you. So let's jump right into it. Before I begin to show you how to apply stock market seasonality in your trading analysis, first I want to explain to you what seasonality is. Like any given year, we have 4 seasons in terms of the weather. There's the same type of pattern in the stock market and any other asset that you trade. However, the seasonality is not based on winter, fall, spring, or summer, but it's based on repeatable periods of price patterns and data. So all we're looking for is to take an asset and to identify which seasonal periods it's strong and which seasonal periods it's weak. When we calculate seasonality, we go back a certain amount of years. So you could do a 2-year seasonality, 5-year, 10, 20, 30-year seasonality plus, and that'll allow you to find out how stock markets move in any given month. So what seasonality charts do is they take January of the past, let's say 5 years, and they add up those prices and show you, was that asset up or down in the last 5 Januaries in a cumulative basis. So these charts will show you a seasonal strength and seasonal weakness. That's all you need to really understand about seasonality, and the rest will jump on the charts and I'll walk you through it. What you're seeing here is the S&P 500 on a daily chart. On TradingView, there's a really neat feature, and it's a free tool that you could add. If you go under indicators at the top, type in 5-period cycle seasonality. It's the first indicator that you see at the top. What it does is it takes 5 years of price data and overlays it on the chart. If you don't add it as a separate pane, you can quickly click and drag it on the top pane and it will actually superimpose it, so it's a comparison view. As you can see, this chart takes the past 5 years of seasonal performance and actually plots it to today's price action. So on the S&P 500 chart, you can currently see that seasonal strength is at play, and that tends to go sideways eventually through the summer months, and then it begins to sell off. This stock market seasonality is an example just on the S&P 500, but you could apply this on gold, oil, currencies, and any other market. Now this is just one example on TradingView, and I wanted to show you a few other charts. If you were to go to stockcharts.com, and these are free charting tools, you could create a seasonality chart of any asset that you like. I have the S&P 500 index up right now, and I'm going to explain it to you. The bottom bar here allows you to change the number of periods that it cumulatively totals seasonality for. The lesser the time frame, the less strong the seasonal trend may be. So when you're looking at seasonality, it's important to start with a wider time frame. For this example, I'm going to go out and I'm going to go to 20 years of price action. So for the past 20 years, you could see that the S&P 500 performs most favorably in the months of April, November, and December. But the strongest month is April, at 75% of the time closing higher than its opening price. Another thing that you could do with this chart is that at the bottom you could change the type of chart you're looking at. So if you would like to see, for example, let's switch back to 10 years because this chart will have a lot of data, or 7 years in this example. If you'd like to see the last 7 years of price action, this chart actually breaks it down by year and color coded. So at the top you could see that the blue is 2017 and the red is 2018 so far. Because 2018 is not done, the line ends somewhere halfway through the chart because it's now July. But you could see any other year and how it's done on an individual basis or how it's performed relative to other years. This plot comparison starts to show you where stock markets have seasonal strength and seasonal weakness. One thing you'll notice that in August, stock markets start to seasonally be weak. In fact, August is one of the months that on a cumulative total, the equity markets are down, along with September. Now, what I want to show you here is if you go over to TradeProAcademy.com to our blog, and I'm going to put the link in the description, you could actually have a look at another type of chart, which is seasonal strength added up. And this is by returns on a monthly basis. But when you look at this chart, you could see that August and September had a negative return in total going back to 1964. This would indicate that equity markets start to get seasonally weak in that time period. So around the end of July and in preparation for August and September, you have a number of options available to you as an investor or a trader. One of those options, if you're an investor, is to protect your capital by getting some exposure exposure to products that rally in time periods where equities drop. That's gold and volatility. Now, if we flip to the gold chart on seasonality, as you can see on the screen, and this is a separate article that we wrote on our blog, and again, that link is in the description below, you'll scroll down and see that the months that gold tends to be the strongest on a seasonal basis is August and September. It is not coincidental that these happen to be the same months where equities are weak. One of the options around August and September is to rotate a portion of your portfolio out of equities and put it into gold to ride out that seasonal pattern. If you're a little bit more of an active trader and you want to get some downside exposure, you could start to look for short strategies throughout those 2 months. One thing I'll point out, however, though, is just because the seasonal trend has been active for 20 plus years, it doesn't mean that it's guaranteed to happen this year. The longer the seasonality chart that you tend to look at in terms of time frame, the less impact any one given year will have on it. So keep that in mind when you're planning your trade setups. If you want to look for something more actionable, you're definitely looking at a 2, 3, 4, maximum of 5-year seasonality. That most recent history in the price action will tend to repeat itself. The stock market tends to remember the most recent transactions the freshest in the memory. So if we flip back to the chart of the S&P 500 seasonality and we go on a bar chart time frame, you'll see that the last 5 years, we'll switch this to a 5-year rolling basis. And in fact, what we'll do is we'll go down a 3-year rolling basis. You'll see the last 3 years, even in August and September, the stock market's outperformed its traditional 20-plus year seasonality. You could see that between the years of 2015 to 2017, in fact, August and September had only a 1/3 or 33% of the time closing ratio higher than the open for that month. That means only 1 out of 3 years had positive gains in that time period. This would suggest that this upcoming August and September provides a really good opportunity for traders to start looking at some long gold strategies and also long volatility. Another asset that we need to talk about is the VIX. The VIX is the implied volatility of all the stocks in the S&P 500 index. So whenever there's a perceived fear in the marketplace, volatility increases and the VIX index goes up. One way to look at the VIX, it's called the fear index. The higher the reading of VIX, the more perceived fear in the market. And if you want to learn more about this, we also created a great video on YouTube that I'll put the link in the description to as well. So to sum everything up for you, stock market seasonality is a great forecasting tool for investors and day traders alike. Remembering that the longer the time period of seasonality you're looking at, the less actual impact any one given year has. I strongly encourage you to apply this to your trading strategy and start following stock market seasonality. A lot of institutional money managers and professional funds use these seasonal trends to adjust their portfolios. These trade adjustments and portfolio adjustments provide a really high probability, low risk trading opportunity for the educated day trader. And this is exactly the type of things that we teach you in our TRADEPRO courses, primarily the Day Trader Pro subscription. That also comes with a daily trading room from 9 to 11 a.m. where we trade live together as a community. Lastly, if you're wondering what could you apply this to, you could look at seasonality for any single asset. The ones I would encourage you to have a look at primarily are the VIX, gold, and equities, because as equities go, gold and VIX will go the opposite way. They tend to have an inverse correlation and relationship, and that allows you an opportunity to make money on one asset as the other's dropping. So as we head into this August and September coming up this summer, remember this: volatility and gold have a 20-plus year seasonal pattern of rallying, while equities have the inverse of dropping. So one action you could take is to prepare yourself. How do you do that? You could do call spreads on the VIX, call spreads on the GLD ETF, which is gold, and there's a number of other ways that you could utilize this information to create profitable trade opportunities. I invite you guys to come out and check our TRADEPRO subscription packages. They come with a 14-day money-back guarantee, and it's literally risk-free. So that's it for today. You guys have fun with this stock market seasonality, and I'd love to hear from you how you plan to apply it in your trading strategy. Alright, and there you have it. I hope you enjoyed today's video and you have a better understanding of how market seasonality works, and more importantly, how it's truly a powerful tool to use alongside a well-disciplined and tested trading strategy. I'd love to hear from you. How do you plan to utilize this in your personal trading? And I'd love to hear from you as well on what you want to learn about next, because we'll create it for you. That's it for today. Please comment, like, share, and subscribe. And when you do subscribe, be sure to hit the little bell so you get alerts when we go live and have new content. We have a morning market update to prepare you for your trading day every single weekday at 9 a.m. Eastern. We'll see you there in our next update. Thanks for tuning in and have yourself a great day. Goodbye.